What is poppin'? This is Slapton. I'm but a lowly Slapton riding these DeFi waves, and this is Today in Crypto, where I give you all of the crypto news that is fit to go ape wild over. Remember that I am but a lowly Slapton, so I am not authorized, certified, regulated, sanctioned to give financial advice, so none of this is financial advice. However, I do hope to educate and entertain, so without further ado, let's get into the first story. And unfortunately, the first story just encapsulates the pain in the market and the blood that we've seen over the last X amount of weeks, maybe even months, right? So BoardAPE Yacht Club, the floor price drops 50%. BoardAPE Yacht Club is considered a blue chip NFT project. It's considered one with staying power, with sustained demand for it. And even it is seeing its floor price get slashed, which is the minimum price that you could purchase any of the collection for, which just shows you nothing is immune to this market pullback. And in my humble opinion, I'm not surprised. I mean, these are highly speculative assets with virtually no utility beyond holding value over time. It's akin to digital art collecting. Everyone was, it's the common critique of NFTs is particularly this style of, just JPEGs is, what are they used for? Why would anybody pay so much money for them? Well, people were spending a lot of money for them because they would appreciate in value. Now that you're seeing this pullback, you can see the real confidence. I always say you can see the real confidence, the real sentiment, the real utility when we're in a pullback and these things are getting slaughtered. So if you're holding a BoardAPE Yacht Club, I wouldn't say panic. I do think there's going to be a return of value when the market's correct, but in the short term, yeesh. And this should be a lesson to anybody aping into a highly speculative project like BoardAPE Yacht Club on the way up. Remember, things that meteorically rise, meteorically fall. Along those lines, let's talk about Bitcoin. Speaking of meteorically rising and falling, since November, it's the all-time high. Bitcoin has fallen more than 50%. It was at 70,000 per Bitcoin, now is under 30,000. But that doesn't stop the institutional investors, the smart money, if you will, from accumulating this like crazy. So the richest Bitcoin whale purchased $90 million on Bitcoin in less than a month. Fear is the mind killer, destroyer of man, right? Fear is what chases retail investors out of a fertile ground for investment, and fear is what the smart money buys up on strong, foundational or fundamental investments, which you could consider Bitcoin in the crypto world. It's the blue chip. So this is the lesson to be learned from this article is when the little guy, the small fry, the guy who got into crypto late or recently because he saw his buddy making a lot of money, when he starts running and she or whoever starts running, that's when the whales come in and they make all their money right now. The bear is where you make your money. Buy right. So learn from them, or at least read this article. Do as you please, not financial advice. I know that I have been buying this dip like freaking crazy because I do believe in Bitcoin long term. I do believe in the boomer coin, the Bitcoin, as the kids say. And I just see this as nothing more than a discount. So let me know what you think about that. Are you a Bitcoiner? Do you believe in buying the dip in this market? I certainly do. And so the second story from the Daily Hodl goes along these lines. Institutional investors right now are dominating crypto. They're the ones doing the most of the trading, most of the buying, most of the accumulating, and the retail investor is leaving the space. This is all, to me, a amazing sign for long-term fundamental investors. I love when you highly speculative apes get into a project at its high, when it's nearing its high, and then sell low. I love it. I love the blood in the water because I'm going to be the one with the whales. I don't have whale money, but I have whale mindset who's going to come in and buy this stuff up. So anyway, this article says that 76% of the trading volume at Coinbase is from institutional investors, and not only is institutional investing increasing by volume, but the retailers are leaving the space. Quarter 1 2022, we saw some of the lowest number of retail investors and some of the highest numbers for institutional investors. Again, buy the fear, buy the blood. It's what the big boys and big girls do. We can learn from them. All right, another cool story comes from the block. Ethereum's mainnet testnet set for proof of stake merge in early June 8th, as a matter of fact. There's, as Ethereum moves, perpetually to its proof of stake. It's been going on for years. News like this should give confidence that Ethereum will actually hit its merge, because this is a test net one of, I believe, a proposed 3. They're going to put 3 test nets through. They're being very careful. They got to make sure that this all works. They don't want to snafu. The amount of money on Ethereum, the amount of value locked in Ethereum is not trivial. They have to get it right. So this one's going to go through June 8th. I believe the main net now target is August of 2022. I'm highly skeptical of this date. I think you can push that 6 months to a year, but even if that's the case, I think it's going to be fine. I mean, the scaling solutions that are coming out for Ethereum are wonderful right now. Polygon in particular, I'm exceedingly bullish on. I think Ethereum can remain proof of work, no problem, for the foreseeable future. It has such an ecosystem, such a market effect that it can take its time. I've changed my opinion drastically about this. I thought maybe a year ago that if Ethereum did not act quickly, that it would start losing market share to other blockchains, which it has to some degree. But in this pullback, in this bear market, even though Ethereum is getting crushed, you're seeing that it is actually what has staying power relative to other what you call Ethereum killers, like cough cough Cardano, right? Same thing with the NFT story. You see what the real confidence, the real trust in projects in a bear market. People are just fine with Ethereum. They're going to stick with it. So they've got their time, but very cool story. I'll keep you posted on this. Very interesting story coming out of the Cointelegraph. Russia will inevitably legalize crypto payments. All right, so this is what's really interesting about this. Russia, not too long ago, the central bank in particular, wanted to ban all crypto, ban the mining, ban crypto. And their excuse was that it was too volatile and it presented too much risk to hold crypto for its people to hold crypto. So what changed? Could it be that the central bank of Russia is failing, that its fiat is failing due to sanctions after the war or after its aggression with the Ukraine? Absolutely. They even go as far to say we were wrong about crypto. So what should this show you? It shows you that these central banks aren't dumb. They understand the value of crypto. It shows that they're threatened by it. So Russia doesn't want to lose the supremacy of its fiat currency. It wants to maintain that sovereign currency. Why wouldn't it? It has what's called seigniorage, which means that it can produce currency at a lower rate than the value of the currency, which is good for Russia. But the minute they realize that their fiat currency is boinked, they go straight to crypto. So it's not just Russia, it's all national central banks. They all understand the power of crypto. They're hesitant to adopt it. Anything they tell you in terms of it's too volatile, it's too this, it's too that, is nonsense. Because the minute they need it, they're going to run to it. Russia's the perfect example of this. So along the lines of government and regulation, we can get into this article about Tether. Tether has to publicly disclose its reserves. It's called an attestation, and it has to do so quarterly. So every 3 months, it has to show the public what it's holding, what its composition of reserves are, how much of it is fiat, how much of it is bonds, how much of it is security-backed loans, how much of it is real estate securities, et cetera, et cetera, et cetera. So Tether argued that by revealing this information, private proprietary information, that they would be putting their product at risk and giving their competitors an advantage, because their competitors could, in theory, sabotage their holdings. Let's say they had a large amount of money in some sector, the competitors could somehow crash it. I don't know. That's their argument. The court has rejected it. This is the New York Supreme Court, which Tether is under that jurisdiction. So Tether will not be able to hide its reserves, and the public will actually have access to that. Now, the current attestation, the one for spring, I believe was due by the end of March. It's a little lag time before it gets in front of the public, but many are interested to see what Tether is holding. And the reason is simple. There's been a lot of volatility. We've seen a stablecoin depeg. We've seen Tether actually depeg from the $1. I believe it's at like 95 cents right now. And people want to know how secure, how backed this really is. Obviously, we'll keep you posted on that. But I think it's good news that Tether has to reveal its backing. I think it should. Decentralized stablecoins. I mean, Tether accounts for half of all Bitcoin trading volume. So it's significant. It's the lifeblood of DeFi. It's the lifeblood, in my humble opinion, of all of crypto. If something massive happened to it, it would take a lot of crypto with it. Think Terra, but even bigger. All right. Another regulation, I'd say that 2022 is the year of regulation. This is a really interesting case that doesn't necessarily have to do with crypto, but will apply, I feel like, by tangentially. So the U.S. Appeals Court, this is the Fifth Circuit. This is Louisiana, Texas, and some other state in the Southeast. they have ruled that the SEC, by bringing defendants in front of their in-house judges, are violating defendants' right to see a or to have a civil jury, right? So that's in the United States Constitution, that you have due process, and it's argued that the SEC is violating due process, and it's also arguing that Congress, which has the power to legislate, by not giving an intelligible mechanism for the SEC to adjudicate its cases, is now also acting unconstitutionally. Now, this is not the Supreme Court of America, so this only has jurisdiction in the 5th District, which is, I believe, Texas, Louisiana, and one other state that escapes my mind, but this does set precedent nationally. Now, the 10th Circuit, let's say, which is another district of the country, could find a different ruling, and then ultimately the Supreme Court would likely rule and create a unified ruling for the entire country. But this is a win, in my humble opinion, for cryptocurrencies. Anything that depowers, that defangs the SEC at current is good, because in my opinion, the SEC is running roughshod over regulation, basically creating legislation through regulation, and this is going to take some of the wind out of their sails. So good on the 5th Circuit Court of Appeals, which I rarely say. And here's what it all boils down to. This is from CNBC. They report on this. The IRS may be missing out on $50 billion a year in unpaid crypto taxes. This is why the SEC, this is why the governments are going to go after crypto further. They want their money. It has nothing to do with the protection of investors. It has nothing to do with volatility, speculation, et cetera, et cetera, et cetera. They want their pound of flesh. It's a game as old as time, right? Governments want their money from people who are making money, because that's how governments survive, through taking money that other people earn. I mean, I'm not making that up. That's how governments survive. That's what they do. They're not in the business of being enterprising. They're in the business of taking people's money and distributing it. So if people are able to hide $50 billion in the US of their money through crypto, governments are going to go after it. That's why regulation is coming, because the space has too much money in it, and too much of it is going away from the federal governments, that they are going to make sure they get a piece of it. Last story is, I gotta have a Terra story. This comes from The Block. So South Korea has an investigative body in their financial services called the Grim Reaper. And it has that name of, it invokes fear. And what they're doing is they're putting more pressure on Terra and Do Kwon, the leader of Terra. And they're going to be investigating the practices by which investors were brought into the space, and to see if Terra was on the up and up. That's the long and short of it. What will come of this? Who knows? I mean, again, I think it's the same old thing that as much as I don't like Terra and Do Kwon, and I think that, he should atone for what I believe to be almost a Ponzi scam. At the end of the day, do I think these regulators really care? I do not. I think at the end of the day, what they're doing is asserting their authority and making sure that the next scam that comes through, that it happens under their auspices so that they can profit. Will there even be major sanctions? We will see. Or are they just trying to grab attention? Anyway, that is today in crypto. Let me know your thoughts on everything. Let me know your thoughts on crypto. Let me know your thoughts on regulation. Let me know your thoughts on Bitcoin and fear. Are you buying the fear? Let me know your thoughts on hot sauce. I don't know. Whatever you want to let me know your thoughts about. All right, I'll catch you guys all in the next one. Make sure that you ape responsibly. Peace, dudes and dudettes.